Hello to everybody, FutureTrend channel is again with you, and we'd like to present our view of analysis of major currencies for the date of 2nd July 2018. As you know, at the moment the situation in the foreign exchange market continues to be under the pressure of so-called full-blown trade wars initiated by United States President administration. Retaliation measures conducting by other countries against initiatives of the United States President is a very serious problem at the moment, because as you could see and as you know, in case of extending of such kind of measures, in case of really strong efforts from the side of other countries against the United States, of course, from the point of view of world economy, it's not boding well for future expansion, and as we suggest, at the end the United States dollar will come under the pressure because of a real weakening of the world economy, despite of the fact that such kind of measures like new tariffs imposed on United States imported goods sooner or later should support the dollar, because the inflation expectations should rise in that case. Overall, the point of view that the full-blown trade war will affect the world economy continue to affect also and first of all the United States currency. As regarding the technical point of view, and as regarding the economic calendar of this week, first of all, let's see the situation with the euro dollar. The euro dollar, as you know, was supported at the end of last week because of approved European migration legislation, but as you could see, it had a kind of not a long lasting effect on the euro dollar, because at the moment the pair is again under the pressure, trading around 116.5, and while below the short-term downtrend located around 116.90. That's downtrend was drawn from the highs of middle of April, when the dollar started to appreciate. As you could see, at the moment the euro dollar trading below this downtrend, and that means that this kind of pair should remain under the downside pressure. At the same time, we keep our long trade recommendation initiated at 115.50 last week, while we are trading above rather strong support located around 115. That's why we put our stop loss below 115 at the moment. As regarding the dollar yen, as you could see, is under the pressure of risk aversion situation associated with current United States trade policy. In case of worsening of trade relations between the world economies, of course the dollar yen should come under the downside pressure, because as you know, the Japanese yen has a kind of safe haven status, and from that point of view it has tendencies to appreciate in case of rising risk aversion environment. And here we continue to suggest that the pair should remain under a long-term pressure, downside pressure, while trading below long-term downtrend located around 111.70. While below that line, we continue to suggest that the dollar yen should sooner or later return to the lows printed in March this year around 104.63. As regarding the cable, here we have some kind of contradicting signals, because from the point of view of fundamental, the pair could receive some boost because of last news regarding the members' view, the members of the Bank of England regarding its situation, regarding the situation with UK economy. As you know, Haldane was in favor of interest rate hike, and that means that any kind of improvement of UK economic indicators should sooner or later transform into a real interest rate increase in the country, and that should mean that the cable should receive some kind of boost and should appreciate against, for example, in that case, against the United States currency. Also here we note a kind of short-term downside trend, and that's located around 132 in the moment. That's why we prefer to buy the pair on a possible retest of the level of 130.50, or to buy it on a break above this downtrend line located around 132. That's why we suggest to break the cable in case of to buy the pair in case of break above 132.15. And finally, some words about the dollar Swiss. The dollar Swiss also was under a kind of downside pressure at the moment, but in case of break above a resistance barrier located around 0.9990 parity level, the pair should reject its abilities to go lower and should retest the highs of 2018 located around 1.0055. That's why we still keep our short trade recommendation in the dollar Swiss with the stop above at the parity level. For those looking in our strategy in euro crosses, you could see that we still keep our long trade recommendation in the euro sterling, and we added to existing position at 88.40. Now we have an average at 0.8862 and a half, and we put a stop loss below 87.50 in the euro sterling. And we still suggest that sooner or later, if we are right, of course, the pair could retest its most important kind of barrier at the moment, located around 0.9020, 0.9040. And finally, some words about commodity block of currencies. Here it's our strategy list. We still missing our any kind of positions in the commodity block of currencies, but we will use any kind of opportunities to sell or to buy it on the extremes. Thank you very much for all of your attention. The FutureTrend channel will be back with you tomorrow morning.